Hey, Jack Marks, $1 trillion man, back here to talk to you about margin of safety. What is this and why is it so important? Look, I mean, this is one of the big principles of Warren Buffett. He talks about it. So how does it apply to penny stocks? Very simply, look, whenever I get involved with a penny stock for Wall Street Reporter's next super stocks, I'm looking for a stock that's trading near rock bottom of its intrinsic value, where there is an underlying floor. There's a floor based on whether it's a technical, where it's the chart, where we're looking at something which is very close to the support line, or there's some other intrinsic value in terms of underlying assets, things which give the stock a floor below which we don't think it's going to fall. Again, I'm looking for those asymmetric setups. So what does that mean? If we're introducing a stock at 25 cents, right? Ideally, I want something which has a $2.50 upside, so 10 to 1, so a TenBagger plus. And look, we've had 9 of these in the last 2 years. I've had, probably many dozens over the last 25 years I'm in this game, and 100 baggers, etc. But again, I'm looking for things which have that underlying intrinsic value. So let's get back to the stock that's 25 cents, for example, right? I'm looking for $2.50 upside, but the main thing is I'm very concerned with protecting the downside. So if a 25 cent stock, ideally I'm looking for something where the downside might only be limited to, let's call it 15 cents, right? So if the downside is 15 cents, or the floor is 15 cents, essentially, if you're buying the stock at 25 cents, what does it mean? Let's do the math. You're risking 10 cents. You're risking 10 cents, and the upside is 250. So you're risking 10 cents to make $2.50, or do the math. It's $2.40, based on the risk. So I think that's a pretty good ratio. That's 25, almost a 25 to 1 ratio. And again, the thing with these penny stocks is, with any stocks, right? It's all a numbers game, right? We may not be right on out of 10 stocks, we may be wrong on 6 of them, right? You might lose money on 6 of these stocks, but if 4 of them become 10 baggers or 20 baggers, you are way ahead of the game. Because look, at the end of the day, this is public venture capital. The world of penny stocks is public venture capital, and we're looking for those massive setups where you can make 10 times, 20 times, 50 times your money, which is what we've had with many of our big winners over the last little while. And but again, all of them, almost every one of them had that. When I introduced the stock to our audience, it had that very limited downside. So a lot of people thought, oh, these things are very high risk, it's a penny stock. Nah, it's really not that risky. I mean, look, anything can go to zero. I'm not saying, these things are risk-free, but when you look at the reality of it, my friends, is a lot of times the risk is quite limited. Situations where there is really underlying book value assets, based on comparables, etc. We'll talk more about that in future videos, but just thought I'd share that with you. Let me know what you think. See you in the next one.